On an important day, Anastasia, I wonder, as we kick things off with the broader market, stocks under pressure, what are you looking at over the near term here? We had the Dow down 700 points today. Is this a substantial retest, basically taking us back to the lows of January?
Yeah, we didn't see really good price action today. And the reason I say that is because we're still below this 200-day moving average on both the NASDAQ and the S&P. And we're really missing a catalyst, a positive catalyst for the turnaround. So I think as long as we're trading below that key technical level and we seem to be making lower lows, although we did rally a little bit into the close, I think until that's the case, we're likely to be in a market environment where these are tactical rallies in a continued downtrend. So we really need to see a catalyst for a positive turnaround. So I think investors also need to grapple with the reality here is that we are in an extended period of uncertainty. And the reason why the markets were so whipsawed today is because this is a binary outcome and we just don't know which way this is going to break in Russia and Ukraine, near term or longer term. And then we've also got the Fed, and that's also another period of uncertainty. So that's just the realities. Until we clear those two hurdles and until we see peak inflation, this is likely the price action we're going to have, which is choppiness, sideways market, maybe a little bit downwards. And it's really difficult to pick one direction here.
So, Mark, with the S&P down just about 1% today, do we go lower from here? I guess how constructive are you at these levels, given the fact that there is uncertainty and there is volatility in the near term?
I think, like you said, Morgan, the near term is cloudy. And I think when there's clouds, you have more days like today and more problems with the VIX going over 30. And I expect that to continue. And until those clouds clear, we're probably going to have more days like this. The question is for the long term and can investors take advantage of now? And, you know, I have some data points that are interesting. We have our first in-person tech conference 2 weeks from today in San Francisco, record attendance, and that's a tech conference. So you'd expect that to have everybody going across the street to the energy conference, and we're not seeing that. So it's an interesting time. I think, like I said, with clouds, people are going to be more nervous, and I think that's what we're seeing in the markets, back and forth and back and forth. We have no direction. But it's a great time to assess your portfolios, to upgrade those portfolios, and buy stocks, frankly, that we never expected to be this cheap. We also never expected them to be this expensive like we saw a year ago, and that's what makes this such an interesting time in the capital markets.
Anastasia, meantime, Mark mentions the VIX, the 2s, 10s curve, 40 basis points. We're watching IG spreads. I assume these are going to be things that Powell is going to be asked to address when he speaks in the first week of March.
Yeah, that's right. The yield curve at 40 basis points is a pretty big red flag. But there's a few things that I would say about that. It's not only about the 2s, 10s, but it's about the front end of the curve and the 3 months and the 2-year, 3 months and a 5-year. And that's not nearly as flat as that back end of the curve. So I think that will give the market some support here. But I think we might be a little bit overshooting on just how hawkish the Fed may have to be. I mean, we went from 3 rate hikes to 7 rate hikes and maybe more. But as you know, with some of these geopolitical tensions, with the markets that really cannot find any footing here, with credit spreads that are widening, that is likely to put some pressure on the Fed as well. And oh, by the way, the data is starting to slow a little bit on the margin as well. So I think if you put all those reasons into one place, and that's why we've seen the probability of 50 basis point rate hike in March start to diminish. So yes, the Fed will pay attention to it, but there's an argument to be made that markets maybe got a little bit ahead of themselves on the 2s, 10s.